Hello everyone, welcome to Tech Mind Investing, where logic meets the market. Today we are asking a question many people think about, yet few can clearly explain. Why has the American stock market been able to rise for more than 100 years? Why do financial crises, recessions, wars, or bubbles only cause temporary pullbacks, while the long-term trend continues upward? From 1896, when the Dow Jones was just 66 points, to 2024, when it surpassed 40,000 points, the increase has exceeded 600 times. The S&P 500 has risen nearly 80 times since it was established in 1957. The Nasdaq has increased more than 300 times since 1971. In other words, $1 in the American market, held long enough, could eventually turn into 1,000, 10,000, even more, if time works in your favor. This is not an accident. On average, American markets break new all-time highs every 6 to 7 years. In the past 150 years, American real economic growth has averaged around 2% annually, while long-term stock returns remain between 6 to 10% a year. This clearly outperforms most major markets worldwide. Look at Japan. The Nikkei took over 30 years to return to its 1989 high. Look at Europe. The FTSE 100 has been flat for nearly 20 years. Look at China. The Shanghai Composite has been stuck in a range since 2007. Meanwhile, America falls, recovers, and climbs even higher. People often explain this by saying the dollar is strong, the Federal Reserve is powerful, Wall Street has capital, America has transparency, or global investors trust the market. These points are not wrong, but they only describe the surface layer. We need to ask a deeper question. Why does America have these advantages in the first place? Why has it maintained a long-term bull market for a century while other markets stagnate? The true answer comes down to only two forces, simple yet often ignored. A young and continually replenished population, and the strongest innovation engine in the world. Monetary policy and market liquidity are surface level. The real foundation pushing American stocks upward is demographics and technology. First, population. Population structure determines consumption, labor supply, tax revenue, and innovation capacity. America has around 340 million people. Over 210 million of them are of working age. Nearly 40% are between 15 and 44 years old. The core consumption and innovation group, fertility is slowly declining, but America still maintains 1.6 to 1.8. Japan has hovered near 1.3 for decades. Korea is even lower at 0.7. Europe averages about 1.5. More importantly, America accepts around 1 million legal immigrants every year, and work visas plus student visas make this number even higher. Immigration continuously injects new talent and young consumers. Population is not static. It is flowing in like a river. Now, consumption. Personal consumption accounts for 68% of American GDP. China is around 38%. Japan, around 55%. In America, consumption is the engine, not an accessory. A young population buys homes, cars, education, electronics, insurance, travel. Even during downturns, life events continue. Young families still upgrade and spend, driving the economy like muscle rebuilding fiber by fiber. But demographics alone do not explain exponential stock growth. The second force is even stronger, innovation. For more than a century, America has led almost all major technological revolutions. Electricity, automobiles, aerospace, semiconductors, computers, the internet, mobile phones, artificial intelligence, gene editing, commercial spaceflight. Every generation creates a new trillion-dollar industry, replacing the old and expanding the total pie. Among the 10 highest value companies in the world, most are American. Apple, Microsoft, Google, Amazon, Nvidia, Meta. They do not just dominate industries, they reshape how humans live. Apple sells nearly 200 million iPhones a year and supports millions of jobs. Nvidia provides the computing power for the AI era. Tesla forced traditional automakers to reinvent themselves. Why does this happen in America? Because it spends about 3.4% of GDP on research and development, one of the highest in the world. More than 30% of capital investment flows into future technologies. Japan is around 3%, Europe near 2%, China around 2.4%. New industries create new profits. New profits create new market cap. Indexes rise not because old companies grow forever, but because new giants replace them. In the past 50 years, more than 75% of S&P 500 companies were replaced. This is not decline, but evolution. Each time the world doubts America, new companies take the stage. After the dot-com crash, Google and Amazon rose. After the financial crisis, the iPhone unlocked mobile internet. After the pandemic, AI accelerated massively. American equities rise not because the past was strong, but because the future still is. Population provides fuel, innovation builds the engine. The stock market is not being pushed up artificially, it is growing upward organically. Policy noise can shake the short-term, but not the long-term trend. Looking forward, growth may continue. AI in America may exceed $2 trillion by 2030. Clean energy, quantum computing, gene therapy, and space technology are following closely. The next Apple or Nvidia may be in a garage or university right now. The American stock market is not history. It is a story still unfolding. So we return to the original question. Why do American stocks keep rising? Because two engines never stopped: demographics and innovation. The bull market is not eternal, but the engines still run. Population flows in, technology accelerates. In the AI era, will American markets slow down or unlock an even bigger future? Share your thoughts in the comments and let us explore where this long bull run will lead next. And if you enjoy this kind of deep analysis, feel free to subscribe and like the video. Your support helps us bring more high-quality investing content here on TechMine Investing.